Chart watchers and DecisionPoint faithful, welcome to this Friday, February 15th, 2019 DecisionPoint show with your hosts Carl and Aaron Swinland. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. All right, Dad. So how are you doing out there in Redlands, California?
Just a bit waterlogged.
Waterlogged, yes. I hear you. It's very strange being in Southern California and having so much rain.
Yes.
All right, well, let's get going with this agenda. All right, we're going to look at those daily and weekly charts for the four major DP scoreboard indexes. I'll also look at the small and mid caps and the DP indicators. And then, of course, those are our Swinland trading oscillators, our intermediate term indicators, the ITBM and ITVM. And then my dad's going to cover the big four, dollar, gold, oil, and bonds. And then finally, the bonus material for the day. We're going to look at relative strength. And a lot of people have asked, what's the difference between accumulation distribution and the OBV? You know, as far as how do they act on the chart. And we're going to look at that. And then we're also going to look at the October top and what the OBV was up to at that time. All right, but let's start off by looking at those DecisionPoint scoreboards. We had only 2 signal changes this week, and they happened to be weekly signals. These IT midterm PMO signals come from the weekly chart. So we look at the weekly PMO, and when it gets the positive crossover, like it did for the S&P 500 and the Dow, we get a buy signal. So your trend model signals are all on the daily chart, just based on our different EMA crossovers. But the PMO signals, daily chart, weekly PMO, monthly PMO. So that's where those come from. And we did end up getting 2 new ones. The S&P 100 and NASDAQ 100 aren't too far from the same signals, and I would expect to see them next week, barring any huge disaster. So we'll see what happens. As far as the DecisionPoint sector scoreboard goes, we did get 1 new signal for the week. We ended up with a new long-term trend model buy signal for consumer discretionary. So interestingly, that's, you know, probably, well, it is. It's our first more aggressive sector with a long-term buy signal. Before and for a while, we've been looking at long-term buy signals only in those defensive areas, being utilities, real estate, healthcare, and consumer staples. So interesting. It probably says some good things for the market, of course, if you see a long-term buy signal coming in on a more aggressive sector. All right, well, let's look at some of those charts. I think we have some interesting ones for you today. All right. So I'm going to start off with the Dow. One of the things I want you to notice as I go through these large cap indexes are the forming rising wedges. Now, the Dow is still holding on to a rising trend channel in the shorter term, but you can see the PMO is now just extremely overbought for if we're in a bear market situation. If we're not in a bear market situation, we usually look for a PMO to get right around 2. But the fact that it's starting to, you know, parabolically move up, and it's almost straight up and down when you look at it in the outside of the thumbnail, you know, that gives me pause. It just seems like we're really moving very overbought very quickly, and that concerns me. All right, there's our new PMO buy signal on the Dow. Like I said, it's off the weekly chart. For the week, we made it through what I thought was going to be very difficult overhead resistance as far as the crossing of both the rising trend line that we have here, the longer term, and then just the declining trend that we've been in since we entered what we believed was or is a bear market. You know, we got down to the lows here. That was more than a 20% drop, and so that technically makes it a bear market that way. But you can see right now, as far as the 17 and 43 week EMAs are concerned, those have now crossed over. But the main thing to look at is the fact we traded mostly above that declining tops trend line on the Dow. And as you can see, we had a over 3% gain for the week. All right, NASDAQ is now looking at a rising wedge and also an overbought PMO. But we are getting confirmation of this rising trend. And, you know, the OBV is just set another top higher reading. So that tells you that volume is behind this move. I'm still concerned about the rising wedge, and then I would say overhead resistance here at that 7,200 level, where you've got tops back, a top back here, and it does sort of line up back here with that top we had back in March. But mainly I've been watching that declining tops trend line, and of course we went through it very easily. But now that rising wedge, it's bearish, and it does tell us to expect a breakdown, but things are still looking awfully strong right now. NASDAQ 100's weekly chart, as you can see, very, very close to that PMO buy signal coming in, but it isn't there yet. Well, we don't need to look at that one. The OEX daily chart, again, another rising wedge and an overbought PMO. Now, look at the difference here on the OBV, though. You can see that the bottoms on the OBV here are mostly flat, and we're getting a rise on the price bottoms, and that is a negative divergence. I would say that there's some issue there. We're not getting the volume yet. Price is pushing up in spite of that. And we do have that rising wedge, as I said. Weekly chart for the OEX. Again, we ended up with the rising or the declining tops trend line. It was broken. We don't quite have the 1743 week EMA positive crossover here, but the fact that we're trading above all week long, this declining tops trend line, I think is bullish. And you can see we're getting ready to have that PMO bottom, and well, we have the bottom. We're going to get the PMO buy signal soon on the OEX. All right, but what's everybody really interested in is the S&P and what's going on there. Now, I wrote about this on Wednesday, that we do have rising wedges that are appearing now on the charts, and the S&P was the first one I noticed. And we do have an overbought PMO right now. It's not moving up quite as quickly as the Dow PMO, but we're also still getting confirmation of this rally that started back here at that December low, because every time we come down and make bottoms on the OBV, they're rising with price, and that's what you want to see.
And it's still, you've got a negative divergence on the, I'm sorry, a reverse divergence on the on balance volume versus price. The December top versus, it's still, price is not up to that top yet.
Ah, yes, yes.
And yet, OBV has exceeded it by a lot.
All righty. Whoops, don't want to do that. Weekly chart. Again, we've continued to trade now above that declining tops trend line. So the major decline that we were looking at as far as the trend in the intermediate term, it's been broken now on all of these major indexes. And there you go, an IT PMO buy signal has appeared as well. These are pretty good signals, I would say. I have the tops, the sell signals marked right now, but they do tend to come in after a low and then the move to the upside. So I find this very bullish, especially coming out of those oversold lows. All right, IGH, let's take a quick peek here. As you can see, I still am seeing, you could make a case for a wedge or a rising trend channel. It's now at the top of what I think is a rising wedge. So I'm looking for it to move back down. And as you can see, typically when you look at the major indexes, you're going to get an oscillation between 2 and -2, and we're just above 2 now. So I think that is speaking to the fact again that we do have an overbought PMO, but it came out of really oversold territory. The scooter, I really like the scooter. It's starting to make that move to the upside. We're not above the 75 level, which would put us in the quote unquote hot zone. But I like to see that improvement. However, you can see declining tops on the OBV here, especially here in the thumbnail. And of course, the tops are rising by quite a bit, but volume really isn't supporting that.
Your wedge, I think, needs the top tightened up and bring that line down to hit the early February price top. Because and then when you do that, I think you'll see it's actually broken out of it.
Coming out of
that's really bullish when that happens, because Normally we expect it to break down out of the wedge, but here you go, breaking up.
Right. Yeah, I often talk about that on Market Watchers, if you, or even in the blogs, if you see a bearish pattern and then you get the bullish conclusion from that bearish pattern, I find that especially bullish when you see that. All right, good catch there. The weekly chart, here we go. As you can see, especially in the thumbnail, we have gotten that breakout above, the top we had back here in the fourth quarter of 2018. Just got above that. We did close at the high for the week, up over 3.3% here, 3.33% for the week. And we did get a new buy signal on the mid caps. Small caps, they're looking pretty good, I have to say. I mean, I didn't draw up a wedge or anything here. It's just a really nice rising trend that I'm catching right here. I'm not really seeing a wedge necessarily. I don't like these overbought PMOs, though. That really is something I'm not caring for. We do see these scooters starting to improve here. And OBV is still, it's supporting this part of the rally. For sure. So we'll have to see how much further it can carry, but it's good to see small caps starting to participate and do well. Intermediate term PMO buy signal popping up on the Russell 2000 weekly chart. And there you go. You can see we're making our move up to that 160 level where we saw those earlier tops in 2018. All right. Let's see if our indicators have gotten themselves up to date right now. Yes, they have. Excellent. So now Carl and I are going to look at these and we're going to read them as we see them because they just recently updated. So I'll give you my thoughts and Dad, you can give everybody your thoughts. But the first thing I'm noticing is a climactic readings here to the upside. And typically when you get those moves, I always like to look at what happened previously to kind of give me an idea. Is this an initiation or is this an exhaustion? And, I think you could read it either way. So I'm kind of curious what your thoughts are about it, because we did have a decline right before we got this climactic reading. And generally, if I get a change in direction with the climactic readings, I go with an initiation. In this case, I don't know. What are you thinking about that, those readings?
Well, I think I would read them as initiation climax.
Mm-hmm. And, I'm sorry?
Yeah, meaning that we probably can expect more upside based on those readings. We know that the tops on the AD lines and the AD volume, bars, they were squeezing together. And then today we've broken out of that trend.
Yeah, so there's the reading right there and the one right here. But yeah, the trend, are you talking about from back here or the one right here?
The end of December, look at the advanced minus declines.
Ah, yes.
End of December. Oh, and yeah, end of December. Yeah, you know. And we had it gradually squeezing down towards the zero line until just actually this week.
Mm-hmm.
And so it's positive, and you look at the VIX, it actually hit that top Bollinger Band back at the beginning of this month. And that's normally gives you a warning that things are going to top out. Well, it did top somewhat. It did get a top, but it wasn't a conclusive one. It's been working higher from that little correction. So we're still waiting for, increased volatility, I guess you say.
Right. And, looking at it oscillating here above the average,
Right.
Typically I look at that as strength as well.
Right.
All righty. I'll save those. All of these charts, by the way, that I'm showing you are in the DecisionPoint Live chart list. So you can get to them, you can click on them and save them however you wish to do it, just so you are aware. All right, Carl and I were talking about this before the show. I was wondering if we were going to see a break of this declining trend today on these indicators, but it looks like we still, let's check this one.
Yeah, it did get above the line if it made it skinny enough.
It's certainly going the direction you want to see it when we're in a rally situation. And I would, again, here's that oscillation above the zero line too that we're seeing on these two indicators as well. So the worst may be behind us after all. Alrighty, and the intermediate term indicators. All right, they're still really overbought, and I've been waiting for that negative crossover. Never happened. Got a bottom above the signal line, and that's usually I find that especially positive. And they are still rising here, but they are really overbought. And that would be my only concern really at this moment in time, is how overbought they are. And then at this point, it tells me intermediate term, we are vulnerable to a pretty good size pullback, possibly correction.
And an overbought indicator in a bull market is not anything to be concerned about. You may get some sideways or some down, but it's not going to, bottom's not going to fall out. Officially, I think we're still in a bear market, but that's because the 50 is still below the 200.
Right.
And
I'm going to just show you what he's referring to here real quick. It's something I talk about all the time, the bull bear market rules, and I really determine which ones to use based on where the 50 is. And the 200 and below, you start to look for those bearish conclusions. So that's what you were talking about there. So.
Right.
All right. Okay, I think it is time to get into your charts on the big four, and then we'll go right on into our bonus material. So let's see, DB show. There we go.
Okay, with the dollar, we were looking at a symmetrical triangle formation, which then price broke out of that, and now we're looking at a rising triangle, ascending triangle, and it's struggling with that resistance up there. But things are, still positive.
Yep, nice looking PMO still.
Weekly.
Mm-hmm. Yeah, I need to go ahead.
Okay, and here again we've got, well, there's a rising wedge formation, but the PMO is turned up. It's like 2 weeks in a row at least on the PMO is holding. One of the things that looks like it may have topped out today, price doesn't make it back to that upper channel line. We would kind of consider that, and it starts back down again, that probably that's a bad situation and it's going to break down from it.
Right.
I don't see I think the main feature on this weekly chart is that trading range has been in for like 4 years. So I think that would be limited to any upside that might come.
Mm-hmm.
Okay.
All righty, next. Gold.
Okay, gold is really doing well. PMO hasn't turned up on the daily, but it's you can see we had a flag formation, and that's a good kind of flag where the prices channel back down to build up some compression to break out of the channel, out of the flag. So maybe next week we'll see that done and cleanly. In the weekly.
All righty. Okay.
Here we have a reverse flag formation, right? And we would expect that to break down, which didn't. So it's very bullish that it's well above that rising trend channel now.
Mm-hmm.
PMO, weekly PMO looks real good.
Yep.
We're still not getting positive um, positive sentiment based on the discount for PHYS, and that's what we want to. That's when we can have a little confidence that more confidence that it's going to keep moving higher.
Mm-hmm.
That means people are really now starting to get into it.
Yes. And just a note with the correlation, this is a shorter term, but as you can see, gold and the dollar are not correlated really at all right now. So they can travel either direction. You know, gold is usually really tied to what happens to the dollar, but right now in the shorter term, it doesn't appear to be a problem.
Yeah, then it's not negative or positively correlated.
Nope. Basically, they can do whatever they want with each other. The other one won't care.
Okay, here's crude oil. You notice I've identified a reverse head and shoulders, and the price just today challenged that neckline.
Mm-hmm.
And so we're looking for more positive action on crude.
Yep.
The PMO is turned up again above the signal line. That's positive.
Mm-hmm. And the weekly?
Pretty much the same thing. One reason I picked this chart for today is the weekly PMO is not. It's not really got a lot of enthusiasm built into it. It's running a very shallow rise, and it's the kind of a configuration I don't particularly like, because it shows some weakness. You note back there in 2016, that's the kind of PMO bottom that I like to see, something more decisive. This one, I get the feeling that it's just going to run out of steam.
Okay.
I have one more weekly.
Mm-hmm.
Just put this one up so we can see that what crude oil is doing per barrel, and it's like, what does it say now? Oh, it's almost $56
really.
$6 a barrel. So that's positive.
Mm-hmm. Might be time for oil to finally do something.
Bonds, notice that it's stuck above that rising trend line, and Aaron pointed out to me the squiggly mannerisms on the daily PMO. But it's above zero and moving sideways, so that's positive. That means there's still positive momentum built in there.
Mm-hmm. And even if you look also in the thumbnail for the shorter term, those bottoms are rising with price, so that's a good thing.
And the dominant feature here for me is the 2-year sideways trading channel, and price is probably going to challenge the top of that, but beyond that, I'm not so sure.
Okay. The PMO looks pretty healthy. It's finally positive.
Yeah, it does.
All right. Bonus time. There we go.
Okay. Here's a method that might save you some time watching different indexes. Primarily, we're looking at big caps versus smaller caps. I did a relative strength line on the equal weight SPY, which means we're looking at all the stocks in the S&P 500 equally weighted, and that index is updated reweighted every quarter. The thing that's cool about this is that's the RSP, the equal weight index, and it tells you what the smaller cap stocks are doing. And when you talk about a large cap index, but they're the top 50 stocks in that are weighted 50% of the whole index. So when you get a look at what the smaller cap stocks are doing, you can see one thing: we had a positive divergence on the two bottoms, and there you go, right there. And then since then, all the mid cap, small cap, and the equal weight, they're all performing better than the SPY. So this way, you don't have to look at every chart of these to find out if they're worth looking at, if there's something interesting going on.
Yep. All right, next up, we got a few more minutes.
Last time I was on Market Watchers Live, Tom asked me to do a comparison between OBV and accumulation distribution line. And later on I thought, geez, two indicators hardly anybody uses. But the accumulation distribution is calculated by the days range, and if the price stays in the top half of that range, you add the day's volume to the index, and if it's below the midpoint, you subtract. It's different than the OBV, because you just simply, if the stock closes up, you add the volume, and if it closes down, you subtract the volume. And one of the things that I've never used it before until Tom mentioned it. So one of the things I noticed is that it doesn't matter. Like, we had a really horrible day in the market. I remember it closed, I don't know, down 4% or something like that. But the volume, or the price, was in the upper half of the day's range. So we had to add all that volume, and there was a lot to the index, which was completely counterintuitive. So that was the first thing I noticed. And then I started comparing the two. Now, notice back in the left side of that chart, the accumulation distribution has got confirmations on the price. Mm-hmm. So it rises as prices rises. This is not really helpful. Where we really want to find out, we want to see where the weakness is, or that there's something off kilter, and alert us. And you notice on balance volume on those three.
Yeah, they're only the confirmations.
Right. We had a negative divergence.
All right. I am sorry, but we are going to have to go over this chart again on Friday. And actually, maybe we can get you on Market Watcher soon to go over this chart for everybody. But I have to close this down right now. So you've got a lot of interesting material ahead of us. So I want to thank you all for being with us today. Please remember to complete that survey as you exit. We'd love to get your feedback and hear what you think of the DP show. And as a quick reminder, we air on Fridays at 4:30 p.m. Eastern. Have a great weekend, and we'll see you back here next Friday. Happy trading.